Ladies and gentlemen, let's get ready to rumble!
The conventional view, for instance, the National Housing Supply Council, which is a federal government body, has concluded that we are short approximately 200,000 homes. That view is shared by the Reserve Bank, Treasury and pretty much every other economic group. And what they're saying is we've had very strong population growth, and that growth in the number of households in this country has not been met by a commensurate increase in the supply of homes. I argued this in a 2003 report to the Prime Minister at the time.
When you take a look at the long-term correlations and say what happens to house prices when population rises or when population density rises, you get either no correlation or negative correlation. It's a useful story to explain, to justify a house price bubble, and any story to make a house bubble seem rational needs some sort of good story, and that's what I see it as. When you look for the analysis, you can't find those driving forces. The driving force is debt. And that's the one thing you don't find the property market lobby talking about, but that's what's really caused the rise in prices.
Time keeps on ticking. Crime keep on tricking. Slime keeps on slipping. Keeps spinning round. Time keeps on ticking, and I'm just kicking away, yeah.
Steve, you've just shaken
No,
your
I
head.
disagree.
Steve, you
Again,
with that?
if you look at that, yes, it's true. We had a big population surge under Howard's massive immigration intake between 2006 and 2010. So that recent historical episode, there was a period where the number of people coming into the country, the growth of population, exceeded the growth of housing. The market was certainly topping out. It was falling back in 2008. People forget there's about a 5% fall across that year. Largely triggered by the government restarting the price bubble with the first home vendors boost, as I call it.
The extension of the first home buyers grant during the global financial crisis unambiguously provided material support to the market and contributed to the price growth we saw during that year.
But the main intervention the government's made has actually been to prop house prices up. I think it's quite facetious of the government to say it's trying to keep house prices affordable, and in many ways macroeconomic
So how has it propped house prices up?
By using the first home owners scheme. This is the 5th time the scheme's been brought in, and every time it's been brought in it's to try to stop house prices falling. 83, 88, 2000, 2001, again in 2008. So it's a scheme both parties have used at different times to fuel the bubble in housing. If you go back to 1990, the level of mortgage debt in the country was roughly equivalent to 17% of GDP. It's now about 90%. So we've had a 5-fold increase in the level of debt, and the reason house prices have gone up is people have borrowed more money from banks to buy the houses, and that increased level of debt has driven up the house prices. It's really been the classic speculative Ponzi bubble financed by a finance sector that finds it easier to give people money for bricks and mortar than it does to finance small business, and that's the opposite of what a banking sector should be doing. But it's exactly the same thing banking sectors did in America, in Spain, in Europe. We've done the same thing. We've been in a debt finance bubble. That's the level of debt households have got into, and the fact that mortgage debt is finally topping out and starting to fall compared to incomes. So with less money coming in, less borrowing behind the market, there'll be less people turning up with cash in their hands to buy houses. That's going to cause an overhang of unsold properties, and that I think will be the major factor driving prices down.